Ever wish you could just print your own money? And I don't mean like firing up the old printer at home. I mean like a whole new financial system.
Well, that's kind of the big idea behind MakerDAO.
And that's exactly what we're diving into today.
We're going deep on multi-collateral Dai, using their white paper, some articles, all that good stuff.
So to wrap my head around this, it's like using digital assets like crypto as collateral to create Dai, which is a stablecoin.
Yeah, you got it. What's so cool about MakerDAO is it's all about decentralization.
Okay, so DeFi, right, decentralized finance. But why does that matter? Why not just stick with regular banks?
Think about it. Traditional finance, you're putting all your trust in one central authority.
One bank, one government, that kind of thing.
Yeah, exactly. MakerDAO takes a totally different approach. It's all about community control, being transparent, and getting rid of those single points of failure that traditional financial systems have.
Which can be, a little risky to say the least. So it's more like instead of one company controlling your water supply, it's more like a community-owned well.
Exactly. With Dai, there's no bank to shut down your account, no government that can just decide to manipulate the currency.
So this community you're talking about, they actually have a say in how this whole thing works.
Absolutely. And that's where the MKR token comes in. Holding MKR is like, I don't know, having voting rights in this decentralized system.
Interesting. So they get to make decisions about how it all works.
Yeah. Like what assets can be used as collateral, how interest rates are set, all of that. They're the ones steering the ship.
So it's like a democracy, but for money. You get a say in how the system actually functions. That's a pretty big deal. Okay, so we've got MakerDAO, which is the overall organization. We've got the Maker Protocol, which is the actual system. And then we've got Dai, which is the stable coin itself.
You got it. It's all connected.
And these MKR holders are the ones calling the shots, or at least voting on them.
Right. They're super important to the whole thing.
Okay, so that's a good overview of the moving parts here. But what makes Dai different from other cryptocurrencies? Or even just like regular money? Let's get into that next. Okay, you've got me hooked on this idea of a decentralized, community-run financial system. But let's talk about Dai itself for a sec. It's a stablecoin, which basically means it's designed to hold its value, unlike all those other volatile cryptos out there.
Exactly. It's designed to stay at 1-to-1 with the US dollar.
So how does that actually work? What makes it different from just holding, actual US dollars?
Well, think about it. Dai is digital cash, but it lives on the blockchain.
Okay.
Which means it can be sent around the world instantly. No bank or government needed.
Right. But there are tons of cryptocurrencies that can do that already. So what makes Dai different? Or better, even?
The stability. Most cryptos, you're basically strapping yourself in for a roller coaster ride with how much their prices fluctuate.
Yeah, for sure. It can be a wild ride for sure.
But Dai is trying to be the opposite of that. It's designed to hold its value just like a dollar. At least that's a goal.
So no more waking up in a cold sweat because your crypto investments just tanked overnight. Sign me up.
That's the idea. And that stability is why it's so useful for everyday transactions.
So how does it actually achieve that stability, though? How does Dai stay stable when the rest of the crypto world is, well, the opposite of stable?
It all goes back to those maker vaults and collateral.
Yeah, we were talking about those earlier.
Remember, to generate Dai, you need to lock up crypto assets as collateral?
So it's like a digital pawn shop.
Yeah, kinda. But instead of your grandfather's watch, you're using Ethereum or another crypto.
And because there's collateral backing the Dai, it's not just fluctuating wildly on its own.
Right. It's all about maintaining that peg to the US dollar.
Okay, that makes sense.
And remember those real-world examples I mentioned before? People using Dai for remittances or to hedge against inflation.
Yeah, you mentioned Argentina, right, where inflation has been a huge problem.
Exactly. Their currency is basically on a crypto roller coaster right now.
So people are turning to Dai as like a safer alternative.
Yep. Dai gives them a way to protect their savings from their own currency losing value. And then in places like Vanuatu, where it can be super expensive to send money internationally, Dai can be a faster and cheaper solution.
So Dai isn't just some theoretical idea.
Right.
It's actually making a difference for people in the real world. That's really cool.
It really shows you how powerful this technology could be, this idea of a financial system that's inclusive and accessible for everyone.
It's a really interesting concept, for sure.
Yeah, and it's just the beginning.
Okay, I'm sold on the why behind Dai.
Good.
But I want to know how. How do I actually get my hands on some of this digital cash? Do I need to find like a Dai ATM somewhere?
You're quite well. It all goes back to those maker vaults. That's the key to getting Dai.
Okay, so maker vaults are like the Dai factories, but they're digital, right? So walk me through this whole process. What does it actually look like to use one?
So imagine you've got like a super secure website
Mm-hmm.
and you connect your crypto wallet to it.
Okay.
That's your portal to the Maker protocol and your own personal Maker vault. You deposit your crypto, could be Ethereum, could be something else, and then the protocol basically allows you to generate Dai based on that collateral.
So it's like taking out a loan, but instead of a bank, it's all on this protocol.
Exactly. You're basically your own lender in a way.
So no credit checks, no applications to fill out. I just put up my crypto and bam, I've got Dai.
Pretty much. But the thing is, the Maker protocol, it's all about managing risk.
Right.
It needs to make sure Dai is always stable and that those loans are backed up by enough collateral.
Got it. Got it. That makes sense. What happens if the value of my collateral drops, though? Like, there's no bank to call and renegotiate terms with.
That's where it gets really interesting. Don't worry, the Maker protocol, it's already prepared for if the market goes crazy.
Okay, good to know.
Remember those liquidation ratios we talked about? Each type of collateral has a minimum ratio.
Right.
And if the value of your collateral goes below that, because, prices fluctuate,
Right.
then your vault could be liquidated.
Okay, liquidated. So the Maker protocol takes my crypto to cover its losses. What does that actually look like?
Kinda, it's like that, but everything's handled automatically by smart contracts. Let's say your collateral is suddenly worth less than the day you generated, right?
Okay.
Anyone can trigger a collateral auction,
Mm-hmm.
and that's where your collateral is sold off.
So it's like an automated auction.
Yep,
And
exactly.
the day I generate it gets bought back and taken out of circulation.
Exactly. That's how the system maintains days pegged to the dollar.
Interesting.
It's all about keeping things balanced, how much day is out there versus how much collateral is actually backing it up.
Makes sense. Okay, so we've got these smart contracts to keep things running smoothly, but who's making sure those are working correctly? Is there like a team of super coders working behind the scenes?
Well, there are teams of experts involved for sure, but remember, this is all about decentralization.
Right, right.
So a big part of the security relies on a network of, well, they're called keepers.
Keepers. Are those the super coders?
Not exactly. Think of them more as independent watchdogs.
Go ahead.
Literally anyone can be a keeper. You just need to know what you're doing and have an incentive to participate.
And what's the incentive? Just to keep this whole thing up and running.
That's part of it, but there's also, financial rewards. Keepers get fees for participating in those auctions, for example.
Interesting. So it's keeping the system efficient and profitable, I'm guessing, for everyone.
Exactly. And then on top of that, there's another really crucial piece. We have what are called oracles.
Okay, before you even explain, are we talking Greek mythology here? Like, should I be picturing someone consulting the Oracle of Delphi about financial advice?
Haha. It's a little different from that. In this context, oracles, they're basically data feeds. They give the Maker protocol info about the outside world, in this case, what the prices of different crypto assets are.
Ah, okay. So they're making sure the protocol always has accurate info.
Exactly, because it needs that info to make those big decisions, like about liquidation and stability.
But just like any source of information, oracles can be wrong. Or worse, manipulated.
Exactly. So that's why the Maker protocol actually uses multiple different oracle feeds. That way it can cross-check the information and make sure it's accurate.
Multiple oracles. Okay.
Yeah.
Redundancy is always a good thing, especially when we're talking about finances. But what about those other risks we talked about earlier? The hacks, the black swan events?
Of course, those are valid concerns.
Yeah.
And let's be real, no system is perfect. But the Maker protocol has a bunch of different layers of security to try to mitigate those risks.
Like what? Tell me more about these safeguards.
Well, first, there's the MKR holders. We've talked about them a bunch.
Right.
But they're not just voting on proposals. They're also the first line of defense if, for whatever reason, the system loses money.
Right. So they have real incentive to make sure the protocol is secure. Skin in the game.
Yep, exactly. But even beyond that, we've also got some really intense technical safeguards built directly into the code itself. Like, for example, have you heard of formal verification?
Vaguely, but remind me.
So formal verification is basically a way to mathematically prove that the code does what it's supposed to do and nothing else. No more, no less.
What? That's intense.
It's like the highest level of code review you can get, and it's done to try and prevent any weird vulnerabilities in the system.
Okay, so they brought out the big guns of mathematics to make sure that Dai is safe. Pretty impressive. This is a lot to take in, though. What's the bigger picture here? Where does MakerDAO go from here?
Well, that's the million-dollar question, isn't it? But the potential here for Dai and for DeFi in general, it's huge. We've talked about some of the real-world applications, but imagine a future where, I don't know, where Dai is just accepted everywhere. Like you can use it to buy anything.
Wow.
Where it's used for everything from tiny little online transactions to like massive international trade
A
deals.
world without needing permission from banks or governments to send and receive money.
Exactly. It sounds kind of crazy, but that's the whole idea behind this technology. There are definitely challenges to overcome.
For sure.
But the fact that we're even having this conversation, the fact that this is all even possible, it's
Well,
it's pretty amazing.
it's wild to think about. And the craziest part to me is the Maker Foundation, the organization that's behind all this. Their plan is to actually dissolve completely at some point.
Yeah.
Like they're working to make themselves obsolete.
It's true. They want to create a system that's fully decentralized, where the community is in charge of absolutely everything.
Wow. So no single entity in control. It's kind of a grand experiment in a way.
It really is. And it'll be fascinating to see what happens.
Fascinating is an understatement. So to our listeners out there, imagine for a second that you're an MKR holder. What would you want to see backing Dai in the future?
Okay.
What kind of world do you want to see? What role do you think Dai can play in this new world of decentralized finance? Keep those questions in mind as you continue to explore for yourselves, and we'll catch you in the next deep dive.